Good day, fellow investors. Let me give you a cyclical perspective on Rio Tinto, because if you look at the stock price, it's clearly cyclical. Now, I am covering this on my research platform. I'm following iron ore as a commodity, and I know that in the next decade there will be a great time to buy, so that's why I'm following it. Of course, if you want better context, feel free to check my research platform, all the covered stocks. I have been updating everything with investment summaries, so just read the first 2-3 pages and you can see whether the investments there that are value-based investments ideas. The average P ratio of my portfolio is 10, and that fundamental value plus the hedges should give us good returns no matter what happens with the market. 21-day money-back guarantee, no questions asked. If you're not satisfied, if you don't think it can create value long-term, just ask your money back. But check it for the context if you are a watcher of this YouTube channel. Everything will come better into place. Now, Rio Tinto, of course, they are investing in copper and other lithium acquisitions, but their key factor is still iron ore. The financials look good, resilient, stable, earnings a little bit down, but still 5 billion of earnings in the first 6 months. If everything remains equal, 10 billion of earnings for the year. Good EBITDA, 20 something billion for the year. They have expanded into lithium by spending 7 billion on Arcadium lithium. They are trying to diversify into other metals, going away from iron ore. But still, their EBITDA will always depend on iron ore commodity prices, which is the key. Lithium has boomed, is really going down and being ugly, so we'll see whether this and when this acquisition will pay off, but that's a different story. Now, when it comes to iron ore, we have to understand first that the cost curve is steep, which means just a small change in demand could crash prices, and that is the key risk there. For now, they are doing okay, good margins, good profits, everything is good. They are paying a good dividend yield, investing into new situations, thus rising the capital investment to 8 billion per year, but still maintaining the dividend. Now they expect lithium demand to boom, but that is again a gamble, but they have the money to do that gamble. They are going into copper, and nothing wrong, good margins there, good margins everywhere. However, going back to iron ore, just a small contraction there could easily bring prices down to 60, especially as things change in the next few years and if there is a recession, as we discussed yesterday. If that happens, the profits are significantly going down. For now, they are managing to keep higher iron ore prices, but the projections are for iron ore to go lower. If there is no recession in the next few years, iron ore will likely be at 80, 70. If there is a recession, it can go to 50. That's a big impact. You look at the iron ore profit margin now of 50, you deduct just 20 from the iron ore price from 100 to 80, and you have to lower the profit margin by 60%. That is the issue, which then impacts the cash flow, the investments, makes the dividend questionable. And that's my message here. With cyclicals, it can get ugly, but that ugly is the time to invest. And if we look at the last 30 years, it was ugly in the late 1990s, it was ugly in 2009, it was ugly in 2016. And whoever bought when it was very ugly made stellar returns, and that is how to invest in cyclicals. Now we are in mid-risk, mid-reward, okay dividend yield, but I don't think that the dividend yield is worth the risk if and when things turn ugly. So it is okay now, nothing wrong with it, but it is a true value investment only in a crisis. It's a true value investment because copper demand will grow, iron ore demand will remain stable, perhaps slightly decline. But if you look at the cost curve, they have a good cost basis, so they will make some money, they will not go bankrupt, which then allows you to buy when the market is really pessimistic. So buy only in a crisis if you want a margin of safety investment for now at these levels with these, let's say, medium-term indications. There is much better. For better, check my research platform or my quadrant video. I'll see you in the next video.